Hi, it's me, Andy here. Good to see you again. Today I'm going to talk about two things. One is a little bit about your answering to some of your questions about iCore, because the semester seems like we are going to go online all the way until the end, most probably, unless there is some dramatic changes in policy. And then, accordingly, some of you are questioning what will happen to our iCore. Oh my God, isn't this the Armageddon, right? No, don't worry. Life goes on, okay? So I'm going to tell you a little bit about it. Number two, some students were asking questions about my previous lecture. So I'm going to answer those common questions, right? Very interesting ones, by the way. So ready for that. Now, iCore, right? Well, the final 2 weeks is going to be about iCore, okay? And then the format of it, okay? How would it be, okay? We still have to discuss, right? I mean, usually what will happen to iCore, what companies will be will be the ones, they have been determined after midterm, okay? So it's too early to worry about that kind of things, first of all, okay? Second, well, if, right, we should insist on online discussions and you cannot get together offline, no offline gathering, right? That can happen, right? Your team project, maybe, okay, you will have to do all your team projects through online discussions only, okay? Is it possible? Why not? Why not? You have WebEx system that you can host your own team project there, okay, Teamworks, right? Also, nowadays you have Google Docs, right, or cloud system, okay? I don't belong to Google. Get into Google system somehow, right? And then share the documents. And Google Docs, what is good about it is that one document you can create online basis, right? You type in and your teammates type in, okay? Somebody types in first, somebody types in later, and the system wonderfully harmonizes all those construction of your reports, okay? And your discussions, you don't need a whole lot of time to discuss anything, right? So WebEx system kind of things, or Zoom, okay, you can do it. Perhaps you can take some, I don't know, some screenshots, right? And demonstrate, get some evidence, bring me some evidence that you are doing, right? The teamwork, right? Don't worry, right? And then what else? Presentation part. Absolutely no need to worry. Why? Because iCore has been on YouTube based anyway over the last 5 years. Ever since I joined this school, the important change I made is that do the presentation online basis. Okay? Record your presentation and then send me your video files, the YouTube link, right? And where can we see some examples? Well, here you are. I don't know how many of you are subscribing to my video or YouTube channel. I saw like 10 different subscriptions, right? But go ahead and subscribe to my channel, and here you see my playlist. One of them is what? 2017 GBA iCore KTNG. Video unavailable, oops. But because this is those guys who uploaded, okay, they took it down after their presentation, so nobody can see it right now. But as long as you want your presentation videos available for public, right, you can let it go on public, right? And you see a whole lot of final reports going on over here, and some of them did it their video recordings offline. Some of them did it online, and you can, okay, do your presentation
Hello guys, I hope
in
you're
your own
doing
way,
good. And this
in
is
your
our
creative
finance
ways, I
team.
guess, right? So don't worry, right? Don't worry. This kind of things you can do it for your presentation. It's not only good for your, you know, online presentation skills, but also it is good for your health and our safety as well. Okay, so don't worry about this part. The school policy right now, publicized, is that until the end of the semester we have to go through online classes, right? So let's follow the rule first of all. Okay, get ready for that. Okay. And the next is about answering questions from my students about intermediate corporate finance. And here we go. The student asked me like this. Well, number one, is the bigger food theory a cause of bubble? Okay, is a question. My answer is that bubble, okay, financial market bubble, there are a lot of different reasons that contributes to this bubble. Okay, there's not one single theory about it. Okay, many. Okay, what is bubble, by the way? The phenomena that the market price goes beyond the fundamental value level. Okay, deviating from the fundamentals. Okay, upward. Crash is the other way around, below the present, the fair value, okay, below the intrinsic value. Bubble is above the intrinsic value, much above, okay, and typically long run, okay, if that happens, okay, for a couple of months, okay, not just 1 or 2 days, but a couple of months or a year, right? Then, so is the bigger fool theory, okay, what is that? But as long as I can buy some kind of worthless asset, for example, samdasu, right? You know this samdasu, right? How much this is, the value of it, okay? But what if somebody, this is traded for like 1 million won, and which means this is in the bubble, right? Okay. Then as long as I can find somebody in the market who wants to purchase it at bigger price than 1 million won, I'm happy to buy it at 1 million won and turn around and sell it over. Okay. As long as I have some bigger fools behind me. Okay. I'm going to buy it and jump into the market and then buy and sell. Okay. That, does that create, is that driving a bubble? Yes, it drives a bubble. Okay, it's one of the theories that explains the bubble phenomena. Okay, but it's not the only one. There are a lot of different ones. Okay, and number two, what if you are the hindmost guy? So much so that, oops, I purchased it for 10 million won, but I cannot find anybody behind me. You're in trouble, man. Okay, so that's a warning I want to tell you. Okay, and then number two question is Kensho versus human analyst or robo analyst. Okay, robo analyst. Previously they called it robo advisor, but the guys in the industry call it robo analyst these days. Is that a really big threat to human analysts, so that we should never ever look at financial analysis or valuation kind of things? Okay, you may question, oh, that's robots are going to take care of it, so let's run away from it and forget about finance. Is that a good response? Not really, first of all, right? Because robo analysts need some human analyst work in the first place, and some human-made data, okay, in the first place. And the way it works is like, typically, you collect a big data of human analyst report. Okay, human analyst report, big data, like how many? Well, tens of thousands of reports, right? Not just 10, tens of thousands of human generated reports. Language, all those words, right? You typed in, and all those things. Throw it into a machine, and then the machine does what? Natural language processing, okay? NLP, familiar words? Yeah, if it is not familiar to you, you're in trouble, man. You should try to learn something about this machine learning anyway, right? Apply those technologies, and then the robo-analyst generates its own report based on it, okay? Now, what's the trouble there? What can be a potential problem? Well, if those tens of thousands of human analysis, human reports, is biased to a certain direction commonly, okay? Then you throw it into the machine, and the resulting report will be biased to the same direction, okay? So people say it garbage in, garbage out. Can happen, okay? Garbage in, garbage out can happen. Right? So staying away from bias, right? Does that mean that the robo-analyst can never unbias those things, okay? Those biases. Is it only human analyst that can unbias all those things, right? Can robo-analyst not unbias all those things, right? Because of this garbage in, garbage out kind of situation. Well, my part of the answer is like yes and no, okay? Yes and no. One thing to warn you is that there are many robo-analysts claim that they are robo-analysts, but they are weakly based on academic theory, okay? So they don't know, okay? They don't really unbias those things, those human analyst biases, which I'm going to tell you later, okay, in the next question. And then just generate the average value of this biased result and then throw out, oh, you know what, here's a sexy robo-analyst report, you know, give it to you. That's going to be problematic. So that's yes part. And no part is that there are a lot of robo-analysts coming up these days, like deep search kind of guys. They are equipped with the state-of-the-art finance PhDs or finance professors, okay? Like the star professors working for them, okay? Is that me? No, not me. But some fortunate finance professors like 이재훈 교수님 kind of guys working over there, okay? And then they know, okay, how to unbias those things, right? Oh, analyst report is biased towards positive. They always say good things. So let's unbias a certain degree, okay? They can unbias those things. For that kind of robo-analyst, wow, that's big surprise, right? That's very important, you know, that could be a really big threat. But at the same time, the big data approach is always based on historical data, okay? What about Corona-19 virus? Over the last 100 years, have we had this kind of virus before? And have we had similar market situation? And the answer is no, no. Totally new shock. If that happens, then robo-analyst may be less helpful for you, okay? So totally new shock, that's something human beings can be, you know, can do some more creative inputs over there, okay? So that's something I wanted to tell you, right? And then number 3, okay, valuation bias about, what's that? The sell-side equity research valuation bias, right? Sell-side analyst report. Are they biased or not? okay, sell-side analyst report, are they biased or not? They are, okay, they are. Simply put, where's the dramatic example? Donald Trump. He's not an analyst, but he is a CEO. He was a CEO of a casino company called Taj Mahal. India, Taj Mahal, right? So, Taj Mahal, shall I say like this? Taj Mahal, right? So, Taj Mahal, what's the problem there? It was a casino company, right? In Atlantic, what's that? Atlantic City or something? And then Donald Trump was owning it, and then it had some corporate bonds issued, right? Corporate bonds. 회사채, right? But for issuing corporate bonds, right, and circulating it, you need some outside analyst evaluating your company, because the investors of corporate bonds, right, they don't know about Taj Mahal too much or your company too much. So the outside general public, this public investors of bonds, right, they need some analyst report. And there came a Salomon Brothers fixed income analyst. And he studied Donald Trump's company. The more, the closer, and the closer you look at it, and he found out this is a bullshit. And say what? I should write a sell recommendation, and wrote sell, S-E-L-L. That was in 1990s. Guess what happened? Donald Trump immediately sued Salomon Brothers, and then Salomon Brothers, guess what they did? They fired this analyst, okay? So what's the consequence? Well, what's the message, right? You don't want to piss off the CEO of the company that you're analyzing, okay? For example, if you're writing a report in iCore, and if I say, write a stock recommendation for this company, okay? Would you feel comfortable writing sell recommendation for the company that you analyzed? Given that you met the CEO, given that the CFO spent his precious time to visit our school and say something about his or her company, would you be able to say anything negative about the company, right? Of course, in iCore setting, you may be, because this is one-shot game, okay? Whatever, okay? And then number two, they may not pay too much attention to your report. Oh, that's one student's, baby step report, okay? They can say whatever. But if it is a repeated game between you and the CEO, okay? Not one-shot game, not end game and say bye-bye to him, right? You cannot, right? Thinking about your careers, right? So you will be biased even in those settings, okay? So that's the thing. Sell-side equity research analysts, they are also biased, very, very biased. So too much, how much of a degree? Well, it depends. We don't know in what setting, okay? And that kind of degree of biases, it's not quantified yet well, okay? That's something the finance and accounting professors, researchers have been studying hard. And that's why those robo-analyst guys, right? Not all of them hire these top-notch finance professors or accounting professors, right? And they just, all they know is just machine learning, here's a sexy technique, let's use it. And throw it out to you. Most people buy it because they don't care, they don't know what the heck is going on. But in reality, that's something you have to be very, very careful about. Even the biggest robo-analyst companies, I doubt, okay? Because the professors in Korea right now, well, are they state-of-the-art guys in global finance and global accounting academia? I don't know, okay? Me? Not really, okay? Anyway, right. The next question is about valuation bias. When you are working as an investment banker for the acquiring company in a friendly takeover, okay? Why don't you have to worry about both sides of the shareholders? Both sides, which one? Shareholders of the acquiring company and shareholders of the target company. Why don't you have to convince both of them in different ways? Okay? This is because in friendly takeover, okay, you don't have to worry about convincing target shareholders, okay? Because that's the job of target's investment bank, right? Basically, in friendly takeover, those CEOs, okay, father and son, they agree with each other, let's say, easily put, okay? The transaction price or the bid price, okay, bidding price. They don't, fight against each other, okay? In good agreement, okay? So they want the deal go through, okay? They want the deal go through. Now, so for target companies, right, you have to convince, somebody has to convince the target shareholders, excluding the CEO. So the target's investment bank, right, who is advising the target company, they will do their job and say what? The bid price is high enough compared to our true value. Okay, 연양갱, it's not a delicious cookie. You saw that, right? That foreigners evaluation of 연양갱. I gave you that YouTube link, right? The case is this big, but the content is very, small. It's not a good company. Likewise, but they're paying this much. Isn't it good? Let's go. So this is their job. Investment banker for the target company, right? How about investment banker for the acquiring company? Let's say 해태제과 or kind of confectionery, father company. The father loved the son. And then the question is, the shareholders, they don't necessarily love the son, okay? So they may question, aren't we overpaying them? And then what? And what? You will have to convince the shareholders that you are underpaying them compared to the true value of 연양갱, right? The price that you are paying is low. Don't worry, okay? So your valuation bias will be what? High. 연양갱, actually this is very delicious cookie, and then and if you go to Japan, you will see similar cookies very popular all around over there, right? And then huge market is over there. God knows what the 연양갱 could do, right? And then once it is merged with our confectionery, then we can create a huge something called synergy, right? We can share the distribution channel. And then we have Japanese markets in our, good potential over there. Only Lotte was there, but Hete will be there too, right? All kinds of things you can say that over there. So you will be biased high to convince these acquiring shareholders because they are not necessarily agreeing with the CEO, right? Your valuation number will be, biased high, okay? So that, the bid price is not necessarily that high. Don't worry, right? That's what's going on. In hostile takeover, your job as an investment banker was busier, right? Busier. Not only the acquiring shareholders you had to convince, but also the target shareholder you had to convince. Why? Because somebody has to say the bidding price is high enough for you. Okay, bidding price is high enough for you guys. 연양갱, who buys that? Ooh, right? Somebody has to say it. The investment banker for the 연양갱 will always say, this is, especially hostile takeover. 연양갱 should be priced much higher than the bid price. Valuation will be biased upward for that case. Okay, target companies, investment bank. So that's why somebody has to be a middleman over there. That's why. Anyway, the next is advantages of DCF. Okay, business rather than the stock. I said that, right? Is that because the stock price in DCF valuation? Okay, is that because there is a in the short run there could be a bubble and bust? Okay, is that because the market is inefficient in the short run? Yes, couldn't be more right. Okay, Buffett always say that. Okay, and then these days, a lot of people, try to go to the stock market, especially individual investors, try to jump into the stock market. And here in the intermediate corporate finance, I give you some opportunities to go there with virtual money, not your real money, because I don't want you to screw up yourself with your real money. Okay, don't invest. Okay, what you don't know. Okay, buy low, sell high. People say, "Oh, isn't it a great opportunity to buy low?" Okay. So this is why my friends working for the banks right now in Seoul, right, the 전무님 or something, they say our work is basically, how do you say, there's too many retail clients trying to open their accounts to do this day trading these days, so much so that we cannot work our usual business, right? There's too much demand going on over there. But watch out, man. Just try with your virtual money and test your ability there first this semester, okay? Right after finishing my first part of Q&A, somebody gave me another question, 정현성 학생, right? Let me read it. Relative valuation에 관한 설명하시는 중에 market inefficiency에 관해서 in time series bias, average level is efficient, and this is distinction between relative valuation and DCF valuation이라고 말씀하셨는데 이게 뭔 소리예요? 네. 좀 더 자세하게 설명해 주시면 감사하겠습니다. 예. 그리고 이 교환에 나와 있는 문장인 relative valuation 중 market inefficiency에 관한 설명에서 pricing errors made across similar or comparable assets are easier to spot, easier to exploit, and are much more quickly corrected 라고 나와 있는데 이 문장의 의미가 뭔 소리인지 모르겠습니다. 자세하게 설명해 주시기 바랍니다. Relative valuation versus DCF valuation. So in English, put in English, right? Well, what do you mean when you say in time series bias average level is efficient and it is distinction between relative valuation and DCF valuation? What do you mean by that? Well, here's my clarification. DCF valuation, okay? You ask Warren Buffett, is market efficient? i.e., is market price equal to fundamental value or true value? i.e., is the market price really reflecting its intrinsic value all the time? What will he say? He will say yes or no. Yes or no. Warren Buffett. Warren Buffett will say no. All right? No. How could such a guru in investment say price is not reflecting fundamental value? Okay? Whereas the professors, especially Chicago, Minnesota, Carnegie Mellon, this kind of Carnegie Mellon, the guys with the efficient market hypothesis, right? The Nobel Prize winners, all these guys say market is efficient and it reflects the fundamental value in the long run. Okay? How could Warren Buffett be different from these Nobel Prize winners? You may say it. And here's magic. In the long run, that is a magic clause, right? In the short run, God knows what, right? So Warren Buffett would say, In the long run, yeah, you say market is efficient and it reflects the intrinsic value or what the heck ever. I believe in it, right? But in the short run, it's not. Okay? It's not. In the short run, bubble will be there and then crash will be there. That's why we find the opportunities and make money. Today, you saw the market index jumped by 5% again, okay, compared to yesterday, right? And the market rallies like crazy and then crash like crazy. So in the short run, the price can be anything, right? Very deviating from the fundamentals. Every stock, okay? If you have 1,000 stocks in the market, can 1,000 stocks have experience bubble at the same time? Warren Buffett would say, it can happen. Okay, it can happen. The DCF guys, right? Warren Buffett, i.e. DCF guys would say, it can happen so that all the stocks may be above intrinsic value or below intrinsic value. That can happen. Take your position the other way and then ask the relative valuation guy, not Warren Buffett, say bye-bye to him and walk to a hedge fund and say, these guys are doing relative long-short kind of strange strategies and quantitative trading, like robot trading kind of things, right? Ask them, okay? And they are doing relative valuation technique over there, okay? Ask them, is the market efficient, right? What would they say? What would they say? They would say, we don't care. We don't care. We assume the market is efficient on average. On average is a magic clause over there, okay? Component stocks, thousands of different stocks. Many of them will deviate from their intrinsic value, okay? Hyundai Motors right now, how much is it? 80,000 won or 90,000 won, okay? Intrinsic value, we don't know, okay? Intrinsic value may be 100,000 won, but it's 90,000 won only, okay? Each different stock may be deviating from its true value. But on average, okay, on average, they will be on the intrinsic value level. They will say it this way, okay? So what I care about is the average of the market because I hold thousands of different stocks anyway. And I just want to find out what is relatively undervalued ones so that it will converge to the intrinsic value in the short run, okay? I can, this is the assumption, okay? Whether the market is efficient or not, and then whether the average of the stocks is efficiently priced or not. This is not some truth that or philosophical truth that we are talking about. This is an assumption that you have to assume, okay? That you have to assume it, right? Right. So let's see this question again, right? In time series basis, in time series basis, right? Not bias, time series basis. Average level is efficient, right? Average level is efficient. And this is distinction between relative valuation and DCF valuation. So relative valuation trading guys, right? Typically hedge fund guys or asset management guys, right? They use this kind of relative valuation technique, right? Because they have to hold some equity portfolio anyway. That's their investment strategy they declare, okay? Warren Buffett or Berkshire Hathaway, what they declared is not this kind of strategy. They already claim that they are DCF kind of guys. Sometimes, if every stock is overvalued, hell, we are going to sell everything off and cash it out. Okay? My portfolio will be 100% cash. It can happen. On the other hand, if the market crashes like crazy, like these days, well, this is a time to all right, like pick up some terribly, miserably undervalued stock, right? And then I don't have cash up to the level. Everything in the stock, okay? and then later on the stock price goes up and then they will sell off later on. Okay? It can happen. In relative valuation, they are different. Okay? They cannot cash out 100%. They have to hold certain equity portfolio by their regulation and their policy in the first place. Okay? That's their strategy and that's their life, by the way. And there they're assuming, right? Let's stay away from, okay, whether the whole market is in a bubble or bust. Okay? Crash it or whether it is bull market or bear market. Okay? We don't try to say whether the average is in a bubble or average is in the crash. Average is efficient. They are just in a higher level, lower level, but we're just taking relative position so that we're going to make some money regardless of the market situation. They say absolute return in that. They say, okay, absolute return because they are making money by taking relative positions. So always they make money. Okay. Anyway, so relative valuation, inefficiency에 관한 설명 중 pricing errors made across similar or comparable assets are easier to spot, easier to exploit, and are much more quickly corrected. What do you mean by this? Well, because of the strong assumption they hold in the first place, right? Their assumption is that our average of this sub-metric, like price to earnings ratio, average PE ratio is efficient level, okay? Once you set it that way, then there has to be some higher PE, lower PE stocks, okay? Relative comparison can always happen, right? So that is why you can easily pick those highly lowly valued stocks. It doesn't take too long a time. That's the whole idea. Assumption is an important thing. Assumption. And then 교수님의 강의에서 average PE ratio가 efficient하고 다른 것은 inefficient함으로 high PE ratio를 가진 회사는 팔고 low PE ratio를 가진 회사는 사야 한다고 하시면서 둘 간격이 점점 좁아져서 average PE ratio로 수렴해야 한다고 말씀하셨습니다. 이유는 buy low, sell high 라는 것을 강의 도중에 말씀해 주셔서 이해했습니다. 그런데 average PE ratio로 도달하는 것이 어떤 의미에서 efficient한 건지 헷갈려서 질문 드렸습니다. Again, what do you mean? Okay, why converging to average PE ratio is related to efficiency, right? Simply because it is just assumption of this strategy, relative valuation model. Okay, this is just an assumption. Okay, it's not a statement of the true state of the world. Okay, it's just an assumption for you to build up your trading strategy and then valuing strategy. Okay, so that's why the average level, we are going to say that average PE is the efficient level PE, no matter what kind of business cycle, in this kind of crash situation or whatever, average, let's say this is, assume it to be efficient. Okay, so much so that we will be able to claim relatively undervalued, relatively overvalued stocks at every moment. Okay, for example, in this kind of crash market situation, having said that there was a 5% up today in the market index, is this a crash situation? Let's put it this way: this is a stock market crash, right? In this kind of dangerous market crash situation, can you still find out a stock that is overvalued? Okay, the answer is yes, because assume the average PE ratio is efficient even at this crash situation. Forget about being crash or being inefficient or something. Let's assume that average is just efficient, and then we can still identify those guys with high PE ratio compared to this average. Okay, of course, average, to be statistically strict, stating with average can be a little bit dangerous because you typically work with median. The median, let's put it, median is efficient. 50% has to be higher, 50% has to be lower. So you can always identify relatively overvalued stocks and then say, this stock is too much overvalued. And then those stocks with below the average, these stocks are relatively undervalued. So buy these stocks. Simple rule, very simple rule. Okay, don't try to make it too much complicated or over convolution. Convoluting all those arguments takes you to hell. Typically, finance guys are living in very simple world, utterly simple world. So don't worry too much. Anyway, so average P ratio로 돌아가는 것이 어떤 의미에서 efficient한 건지 헷갈립니다. 어떤 의미에서 because this is just an assumption, okay? Not really we are saying in efficient level in other very truthful and theoretical level, okay? Hyperbolic kind of, or Warren Buffett kind of difficult way of doing it. Because we set the assumption as such. That's the reason why. is 마켓 입장에서만 그런 건지 아니면 회사 입장에서도 그런 건지. Because I would say in the market level, not in the firm level, okay? We are assuming, imposing those assumptions that the average or median level PE is efficient level. Let's say it. A median PE is efficient PE level. And forget about each companies, whether they are in the true PE ratio or something, okay? So that's very quick and easy way of investing, right? That's it. Relative valuations, market efficiency, inefficiency가 좀 헷갈린가 봐요. All right, so you're going to get confused, right? When you talk about market efficiency or inefficiency from the perspective of relative valuation. It's the assumption, okay? Assumption that we have to impose and then in relative valuation argument, right? Each and every moment, average stock is, on average, they are efficiently priced. That's the whole argument, right? So I hope this helps, and then see you next week. Bye-bye.